Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, September 27th, 2024. It is 12:45 p.m. Eastern Time, and here's what I'm doing this one. I need to start out with a couple housekeeping items, and then we're going to roll into just a quick update on some of the trade ideas that I might have left out yesterday or need an update. Just a couple things there, treasuries, utilities. I think I left out XLU yesterday. Somebody asked about it. And then we're going to roll into trade ideas. Now, the housekeeping items, I was offline pretty much since my last update yesterday. We had, you guys probably, I don't know if you watch the news where you live, we had a big hurricane out in the Gulf of Mexico that skirted by us and was actually stronger than expected, but particularly here. And the odd part was we had the worst effects well after they forecasted it. So power was out. I had power out later in the day until about 2 in the morning last night. And that's always fun when it's hot and humid outside. No AC. But either way, so I spent a lot of time dealing with, we had storm surge and all that. We live on the water by the mouth of the river right next to the Gulf of Mexico. So we're okay. I just got a mess to clean up out back. And just want to let you know I'm back online catching up today and have replied to some of the recent the questions and comments, which segues into the next thing I wanted to cover. There has been, and it's been eating at me a little bit. I usually take the high road. Criticism you're welcome to, especially if you're, a subscriber here, you disagree with something, you have a different view on something. And what's happened is we've always had, productive discord, or conversation, I should say, in the comment sections. And one reason that I even do this site, first and foremost, I'm a trader. This site is a hobby, if you will. Yes, I do charge for it, and I'll talk on that in a second. Why? Well, I'll just tell you real quick. If you visit any forums online, be it just, let's say, Twitter, or let's say a more concentrated trading group like Stock Twits, or you go to the comment sections on investing.com, you'll notice anywhere where you have free subscriber, you get typically the dregs, not very experienced investors. You get a lot of, snarky comments, trolling, that kind of stuff. One example is a Wall Street Journal. I love, it's gone down a little recently because I think they've been dropping their prices. Why? But it's always been, $20 a month or whatever. And it tended to attract a more well-educated group of folks. And so they were always found, some value in the comment section there, versus if you go to, let's say, those free sites, you'll see the difference right away. So by having a premium service, you're getting people that are really serious about this, and you get good questions. And one thing over the years, and this is when I start segueing into trade ideas, is that I find tremendous value from you guys. Some of you have been doing this longer than I have. I've talked to people that work, have 30 years experience on the floor of the CBOE. Floor traders, portfolio managers, things like that, as well as just the regular folks saying, hey, Randy, which I'll get to in a second, what do you think of XYZ? And then boom, I wasn't looking at XYZ, and I'm like, wow, there's a great trading op. Thanks for bringing that up. So keep the comments coming. Keep them productive. But lately, it's been building and it's been a small handful. And I usually take the high road with trollish type comments. A trollish comment is something with no productive value, just outright negative criticism. And so finally, what came clear yesterday in this thread, what's going on here, and it leads to, this is what I want to share with you guys. So one of the most vocal, angry folks here is OakSurf65, who turns out has not been a paid subscriber for almost 3 years. Had a last time his membership expired, or he canceled or expired, was in early 2021. So he's literally been trolling this site without access to any of the premium content. So if you know how the site works, it's a mix of, it's almost exclusively premium content now. I used to have a public YouTube channel, which I long since stopped, because my goal is not to, run a very successful trading website and social media. If I was, I'd be on Twitter and X, whatever, Instagram and YouTube and all those social media feeds, and I don't do that. I do this. I like to keep it small. That, to me, do well enough off my trading. This is a side hobby, and it pays for all the programming and thousands, if not $10,000 of web hosting and all that other stuff that goes into there. But where I'm going with this is the comment thread, when it starts to become hostile, as it has with a lot of folks here, and you guys know that there's only a handful of them, and it turns out each and every one of those. These folks here, Al Shaw's just crazy kind of rants that really mean nothing. Just kind of skip by those. All of these no longer had active subscriptions, and actually some of them, and this is why I'm sharing this in this video here. Some of them actually had access to the site as a silver gold member, but haven't been paying for a couple years in some cases, and that's all. So I've thank you. Well, Oak Surf should we'll get this fixed. I'm going to bring in the programmers. I believe I plugged the leaks here. Shared that even though he's not a subscriber, he's able to get in the comment section, and that shouldn't have been happening. So it had to do with settings in the membership software. So where I'm going is there are some of you that listen to my voice that haven't been paying because every now and then you get a little glitch in the software, and I'm just going to speak to that quickly. So the site is set up where right side of the chart, there's none of your financial information, your real name, none of that is on there. It's whatever email address you use. And then when you go in, there's three portals, if you will, portals. There's the payment gateway we use, and I always have, it's called Stripe. It's one of the biggest credit card processors in the country, used by many huge companies, and they're known for their technological, it's very advanced and want to consider one of the most secure online credit card payment processors out there, and that's what we use. And so when you subscribe, or if you start a subscription, you're not doing that on here. You're going straight to them. It's I can explain the technology, but I don't have access to that, and that information is not transmitted to the right side of the chart. You give them your credit card, Stripe is the processor billing, and there's these things called webhooks, and they connect to the software, which I pay for to control the membership. And that's where we've had some glitches. And some of you listen to my voice, we know recently, it started a couple weeks ago again, with these little webhooks, which talk to, say, okay, Stripe, somebody bought a gold membership monthly, and then it's supposed to tell the site, give them access. And some people weren't getting access recently. Fixed that. I'm on top of the emails right now. If you have any problems, as always, let me know. I don't regularly check that every day, the support, the contact form. So if you haven't heard anything, just bump me here in the comments section. That's fine. Say, Randy, check your email. I sent you something, having problems with the site. So we're going to go through there, and like always, I'll have to get a programmer in here and check to see which of the accounts, because when those webhooks disconnect, there's a software update or something needed. Some of you may still be accessing the site and haven't paid for a year or two, and that's fine. Enjoy the content while you have it. We will be kind of closing those accounts down, and those like Oak Surf, who didn't even have access to the paid comment, and that's where it kind of hit me here. These folks are continually criticizing only one trade, and that's a trade on the market, which is, as I did an extensive video yesterday, it's a small part of what we do, a small part of where I put my money. And then not even talking about, we've had as many, just about, I'd say in the last 6 months, as many long entries, reversals, and breakouts and bounces off support, even on the indexes, as we have shorting. We've been kind of swing shorting the way it's a swing trading site is what this is. We're not, if you want to buy every dip, there's folks that talk about that. The market's going up, buy a dip, buyers are in control. If you believe the market's going to go up forever, then just listen to the late, great Jack Bogle's advice. Put all your money in a low-cost index fund. And if you've got a 30-year time horizon, buy every dip. And, 30 years from now, you should be okay. I'm going to speak to that in this video if there's time. I'm going to show you the Nikkei and what we could be looking at here with the U.S. stock market going forward. So anyways, I didn't want to go off for too long. So the 30 components, just so you know, are for the site. There's right side of the chart. running HTTPS. It's encrypted, everything on the site. It's a secure. I'm very up to date on that with programs and all that. Stripe, again, it's a whole different company, and they just transmit little, okay, you've got paid here, and it keeps that membership going, and we don't have access. So no matter if they hacked this site, they couldn't get to any credit card information because it's not here. I don't have that. And then the other one's MailChimp, and that's the biggest email marketer. They're owned by Intuit, who makes TurboTax, one of the leading tech companies, and that's where your emails go out. And that also, so what I'm going to do is bring in some programmers and make sure everybody's supposed to be getting those emails when they go out. Make sure everybody's up to date. Anybody that's a current gold or silver member, the system, what happened if you canceled or let your card expire or whatever, the system should have said, okay, cancel that membership here. But a lot of it seems several were still going. And so anywho, that should be taken care of. And if it's not, if we get any more posts here, I never have and never plan to censor. I've never deleted a single comment ever, and don't ever want to get there. That's one reason Musk bought Twitter. He did, during COVID, as you all know, Twitter was cowing down, taking orders from the federal government to, suppress and moderate and control posts in favor of the vaccines and all that other stuff. And there's a lot of that out there. And so Musk thought everything should be out there. But there's a fine line there. Anyways, enough on that. I encourage questions. If you have different opinions on something, you want to share your own trade idea, that's fine. Put it here. Just keep it productive if possible. There's no value in saying the market's going to go to the moon or gold's going to go, to zero or whatever your views are. If you have an idea, you want to share it, you want to cite the reason why, great. All right, enough said there. Hopefully we get, and by the way, the usual names, you probably know them, are Becky, Alshall, Oak Surf 65, and Italiano. All of those four have been the most critical, again, almost trollish type comments. Not a one of them have been paying, and most of those didn't even have access to the paid comments. So that's the other part. So when you look at the site, almost all content's premium. If you're logged out, you have lock keys on here, but certain things, such as sometimes just general broad market analysis without price targets and all that, I will open up for public access so people can come in and read some things. Trade ideas are always locked until they're complete. Intel, the other day I hit, that's where those trolls jumped in. You had Alshall, Oak Surf, and Italiano all coming in because that is an unlocked post. And as Oak Surf mentioned, I didn't realize that even if you don't have an active subscription, you can still post comments. So point is, they're not reading or taking or watching the videos on the trade ideas. So, trading the stock market is one thing at any one point in time, should only be one of many different trades. And, I wondered why these guys weren't talking about, man, I've done great on natural gas, or, thank you for the, treasury bond, or whatever it is, long, short. We got a lot of stuff out there, and that's all. I just preach the values of diversifying. And I realize now why these, because they could come into these unlocked comments, some of those that don't even have access, and able to post those trollish type comments, not knowing what we're doing, not knowing when we're going long and reversing, because that is locked content. I'm telling you, if we're covering shorts and we're going to go long, like we did on August 5th, and then again after the last reaction low, those are locked for subscribers. So these folks wouldn't even have any idea that we covered shorts and went long. So there it is, guys. Long-winded thing, but just a heads up. And again, if you have any problems in the coming weeks, as programmers are going to be going through here, and I'll be going through there to find those old stale accounts that didn't sync up, in that, I don't know if it shouldn't affect any current subscribers, but if it does, just shoot me a question in the contact form right here, resources, or if you don't get a reply back, you contact us. Where is it? Right up top. Oh, there it is. Contact us. If you don't get a reply back within a day or so, feel free to bump me in any of the most recent posts. Sometimes I do my best to keep up on these, but sometimes if we get too far back, I might not go in and see if you replied to an older post. Okay, with that being said, let's talk about a couple today, and this is again why I find value. We're going to segue into trade ideas. So somebody asked for XLU, and I believe I may have left that one out in yesterday's trade idea updates. I tried to look and recall everything that I've covered just in the last couple months here, trade ideas long and short, and it's pretty extensive, and as you can see, very diversified. Like that's the key to investing every bit as it is to swing trading. You want to don't put all your eggs in one basket. And so that doesn't mean if you have 10 different stocks and you happen to own Apple, Nvidia, Microsoft, and maybe a couple ETFs like QQQ, well, guess what? You're not diversified. That's complete overlap. Those stocks and ETFs and sectors and indexes tend to move in near lockstep. So to be diversified, you want, depending if the opportunity is there, fixed income, i.e. bonds, maybe that's corporates, maybe it's treasuries, commodities, and within commodities, you got, natural gas, crude oil, wheat, corn, soybeans, copper, gold, silver. You get the point. So spread it around. Any one day, something's going up, something's going down, and you don't have those big swings in your portfolio, right? And I'm also, as per the request of several subscribers recently, I'm making more of an effort to do what I used to always do, is give you the suggested stops on trades. And keep in mind, if I say max stop, I'm referring to if you're going for the longest price target, that would be the maximum stop. If you're only going for T1 or T2 and there's total of 4 price targets, you might want to use a smaller stop. All right. And so XLU, question was, is it still a good short setup or making the best to stay clear? Well, at this point in time, remember when I put it out there the other day, I said, I'm going to go ahead and add it as an active trade in anticipation of a breakdown. I don't have that post queued up, but I can do that, or you can pull it up. You can just click, go to the homepage. It was just last week, I think. XLU still looks like a good setup to me, with the keyword being setup. So when I added it, it was an active trade, but in anticipation of breakdown below the bearish rising wedge pattern. And that was also the alternative and higher probability entry. As I said, you can take it there. I believe it'll break down soon, but that hasn't happened yet. So it is both an active trade, because I made it such putting it on, but it's also a trade setup, because it said conditionally that would be your alternative entry price. And so would I right now? No, I don't like the fact it's still holding up pretty well. At this point in time, I would wait for, and I'm still planning myself to wait for a break of the trend line S1, which is a trend line and 78-ish support just below. So now, see, the other day we were closer to that level. Now we're a little higher. So the trend line is going to go first, and then 78, and then that should open the door to these targets. So at this point in time, it's just like the stock market. It's not going up. We had a one-day pop on everything, and just like the stock market, it's been moving sideways since the Fed. And so there's your higher probability entries. So do I like it? Yeah. Do I think it'll play out? Yeah. But this is the higher probability entry. It's still a setup there with, again, if that's the alternative higher probability entry when that level goes. So that's the update on XLU. And we got another one here. Hopeline did not do too much damage. Dow straight up to all-time high. All right. Great. I don't know. I'm not trading the Dow. I don't know if you are. Only index I'm focused on right now is the NASDAQ 100. But either way, all right, good to know. There was one other one. Where was it? It was, I'll just get to it. It was in one of the other comments. Here, let me find it here for you. Oh, well, there are 2 more. Okay, that was in the previous post. Somebody asked about XBI. Here's my updated chart I posted there. You can see, just go in the comment. Again, I'll show you which post in a second. So you still have the big divergent high right there. You have, this wedge right here. If you take this trend line and just this, that's your most recent divergent. But the divergence really has been building since all the way back here at that last divergent high. As I mentioned, small divergent high. Sell signal came on a break of that trend line. We got that drop. Now this is your current uptrend line. Very well defined. You've got a lot of reactions there. And that's your other larger divergent high, or DH2. And so you still have to take out S1 right there. Here, I'll pull the live chart and you can see it here. So there's your update on XBI. And like I like to say, support is support until less broken. So look, since the last update, we've had 1, 2, 3, 4 successful defenses of the 80. It's 97.90 price support. intersecting with uptrend line support, dual resistance. So once it goes, it should be a pretty good sell signal. But like I like to say, sport is sport until less broken. So no breakdown there yet on XBI. The other one in that same thread was somebody asked about this one. Be right. Randy, can you give me your take on QS, QuantumScape? So not looking bad. Here's my notes right here. It says QS breakout and backtest of the primary downtrend line with a buy signal to come on a solid break above the 636 resistance area on the daily chart below. So let me just pull the daily chart live. You could, again, reference it there. I just posted that not even 45 minutes ago. And then I went through, I noticed in the sector, there were a lot of other decent looking setups. So, I always have to, number one, for the most part, but not always, birds of feathers flock together. We're seeing some bifurcation right now with some stocks doing well, others not doing well. That's when it becomes a stock picker's market. We've got the same, handful of folks chanting that the market's going to new high, or the Dow's at new highs. Here's the NASDAQ 100 trading today where it was back in middle of June, and that's 3.5 months ago right there. So we went up a little, we went down a lot, we came back up, we went down, and we're back there. So this is where, swing traders, again, this is what I've been highlighting. That's where I started out trying to clarify with those trollish type comments that this has been a great market to swing trade, especially at this. Yeah, took many shots on these. We actually profited on quite a few. None of them proved to be the top, but then I've had more evidence than I ever had since the rally started here to identify a top right there, which so far is the top. And again, this is the index that matters to me. I don't trade the Dow. If you want to trade the Dow's at new high, great. But this is the one I'm trading, and this is the one I'm focused on. So on that, so again, where the market goes will most likely determine where these goes. But I'm always glad to, and what I do is I give you my opinion. And not only do I give my opinion on every single stock I analyze for security, whether it's an index, a commodity, ETF, bonds. I give you my opinion, then I also throw in my conviction on how strong my opinion is, and I try to do that too to gauge it. Well, this is what I think, but right now it's hard to say. And if this and this and this happens, then I'm going to have higher convictions. Just like we need to open the door to my deeper downside targets. I still maintain those on the indexes, but as I said, I can't. The odds are right now going to go up exponentially higher when we start taking out the levels that I've talked about that we need to take out. This is just a weekly chart. These two levels there, the 200-day moving averages. And then I can tell you with a very, very high degree of confidence that these targets are likely to be hit. I can't tell you that with the highest degree of confidence now. It's still my preferred scenarios, meaning I still think there's better than a 50% chance these targets are going to be hit before the NASDAQ 100 makes a new high. And that hasn't changed. So let me go back to the QS, and then I'm going to share with you actually both long and short trade ideas in the sector. So when I pulled the chart, here's what I said in that reply. You can again see the chart there. You have this primary downtrend line right here, comes off the highs back there. It's 20, right around 20, beginning of 2021. You've got a couple nice, clean, distinct reactions. Powerful and impulsive breakout there, and currently back testing. And as you can see, 636 is a pretty decent support level. We've had, when you zoom in, you can see, acted as support here. It was roughly there, a little punch below it. And more importantly, recently, this great support, we broke it, and then back test, rejected. Finally, a breakout. Now we fell back below it. We've moved through it a few times, so it doesn't make it super duper solid resistance, but it is resistance. And, the traders have, when it's broken above, they back test, it then acted as support. When you were below, you can see resistance, breakout, failed back below, but we also had the back test, breakdown and back test. So that's it. This is not an actionable trade. It's a trade setup. It's testing the 200 days as well. If it pops it, and you can see this chart recently looks like an EKG, right? You got these just big spikes here, and this is the nature of this thing. Now let me just measure these trends for you. That pop was 126%. This pop right here was 138%. This pop right here was 89, almost 90%. This last pop off that divergent low was 105%. Okay, you get the point. There's a lot of juice in here, a lot of profit potential. But if it goes the other way too, look at the drops. The drops wiped out the previous rallies up, or most of them, if not all of them. So that's it, guys. It's simply a setup. You set a price alert like that. I wouldn't take it here because, as I like to say, resistance is resistance till that's taken out. Some might think that's an aggressive price target. That'd be a 50% gain, but it's just par for the course. It's half of what it usually does when it pops. So that's why I have these additional targets here. Right now, let's just focus on if it pops 1377. But all of these are potential additional targets, and the higher targets are only likely to be hit if the stock market's going to new highs. I doubt we're going to see this stock run up, 550%. If we are in a bear market, we go down to my next targets. Remember, this is it's in the auto parts sector. So that brings me to what I'm going to do here for you, and this is what I do again. Someone brought this to my attention. Looks like a nice bullish setup. I'm doing my best to give you guys a mix of long and short trade ideas. I know some don't short, whether they don't know how, they don't have a margin account, whether they think it's anti-American, whatever the reason. But even myself, to sit there, we're in the, my long-term trend indicators are still bullish despite my longer-term bearish outlook. So I can't get crazy all in 100% short until that point in time. So, it's a stock picker's market. So I like a diversified portfolio, long and short. And I'm going to show you a few others in the sector. So then, as I often do, if something stands out, I'll glance the sector, and this is what we're doing here. I'm not going to go very deep. I'm only going to cover, I think I have a total of 16, the top 16 components. As I often do, I'm going through this sector. It's on to the right of the screen here. You can't see it, but I go through by market cap with the large and descending order. So APTV is a 19.2 billion-dollar company in the auto parts sector. And I'm not an expert in the auto parts sector, but I think you're going to see as I go through these a dichotomy of charts, either outright bullish looking, even though they're in bearish trends, the bottoming plays that I'm going to show you, and then also bearish charts, that are going to be stocks that are near or at or near multi-year highs, but have bearish technical postures. So, I know I see things different. Most 99% of people you talk to, and if you look at those little stock scanners like in investing.com or Yahoo, it'll give you the little outlook for the stock and the current trend. They're going to, right here, you're going to have bullish. It's going to say the stock is bullish. And, that's hindsight stuff. It is, if you can catch a trend, hold it, milk it out as long as you can. But when I start seeing overbought conditions, negative divergences, volume indicative of a top, then boom, divergence is never a sell signal, but what is a break of support. You had a nice clean up trend line there. I'm sure that showed very well, and was probably a nice bearish rising wedge on a 60-minute chart. If you shorted it, let's just for kicks and giggles say you held it all the way, you made 64% on that short trade. So very, very profitable. Anyways, and then you can see it's come full circle. Nothing goes down forever unless some do. Some companies go bankrupt, guys, and I really think we're going to see that over the next year. And Jamie Dimon, I know I keep talking about him recently because he's just, nobody has a better pulse on the U.S. economy than Jamie Dimon, running the biggest bank in the country, J.P. Morgan Chase. He can get nitty-gritty drill down reports on we look at the stuff that I've showed you, credit card delinquencies and all that. He can get as granular as he wants. And so, and again, he doesn't have he's been pretty pessimistic on the economy, and it's not in his vested interest to be. I don't think he's selling any goods. He's not selling a book or any services. Anyways, but where he and I also agree on is that the credit spreads are priced for perfection right now, and that is the difference of what Treasury bonds and low-grade corporate bonds are paying. And so where I'm going with this is be careful bottom fishing. I've seen a lot of times you see these nice-looking stocks, but you got to say what's wrong with a company if the S&P is flirting with or the Dow's making new all-time highs. Why is this company down 70%? What's going on here? Now, with that being said, I'm just throwing caution to the wind. You don't put too much money in it because companies that have now what you would want to do is do a little due diligence on the fundamentals. Yahoo Finance is a great starting point. You can drill down stuff, find out what's going on. Make sure the company doesn't have a massive amount of debt coming due that they can't pay, that's about to roll over, or some other fundamental problem, because you can wake up to a bankruptcy filing and a stock can be down 30-40%, bypassing the most well-placed stops. So keep that in mind. Okay, with that being said, look, the economy has got a lot more life in it. My recession call is wrong. This is going to be, some of these stocks I'm showing you here are going to vastly outperform the S&P 500. This one's a nice looking bullish setup. Yes, it's in a downtrend. So yes, most analysts are going to have bearish, price targets and, sell ratings and all that crap on it. Just like they were, always at the top, the max amount of buy ratings and higher price targets. That's just almost guaranteed at any point in time. The analysts are just clueless out there. I baffles me how they, who's paying their salaries, because they're just collectively almost always all bullish at the top and bearish at the bottom. But again, because it's in a downtrend and they're just, it's recency bias and all that other stuff. This is a nice looking chart. So you've got the downtrend line here, minor downtrend line, positive divergence, aka divergent low, just like you had. That was a big divergent low right there. I don't fully have this marked up because I wasn't trading the stock back then. And if you bought that divergent low in a matter of 4 months, you made 60% on your money. If this divergent low breaks out, you can see my targets. It's going to be from the breakout point, which would be the downtrend lines. My max target's about a 26% rally. And if the market, guess what, guys? If I'm wrong on my market call and QQQ breaks out and blows past my bear market topping targets and SPY's going, and all of a sudden I flip to more bullish on the stock market, then I'm going to extend the targets. And I think this one can come up here at about 113.80, and that's a 50% rally. Okay, so I'm going to go through the rest a little quicker. I won't repeat what I just said about be careful, don't get married to anything, especially companies that have been going down when the economy is supposedly firing on all cylinders, according to, some folks out there. MGA, this one just broke out. Again, these are all auto parts. Nice, clean, little short-term downtrend line right here, coming off that high. Breakout and successful backtest and moving higher. Has some resistance right where it is. I should add that line. I can see right here. But no, just it's popping. If it can take out today's high, see, there's a previous reaction high. You should always look at previous reaction highs, and you want to see it pop that, especially on a daily closing basis, or get well above their intraday with some volume to boot would be better. And then boom. So your price target, so let's just say a break over today's high would be your entry point. First target, 46.39, that's 7%. Second target, the downtrend line, that's about 16%, right? 17, depending if and when you hit it. That's MGA. That one's bullish. LKQ, downtrend line, divergent low, and that's the common theme on a lot of these. You're going to see most of them are bullish, but some look like this right now, bearish. But this one's bullish. I don't have the price targets. If you want it, or any additional information on any of these or other ones, I'm not going to, nor have I gone through the entire sector. There's 52 in this watch list, so I went down to about the top 16. I saw enough. I'm seeing a lot of these guys recently putting in divergent lows after having the snot beat out of them, and they're recently breaking out. Very nice chart. So some, like I just showed you, haven't yet broken out or poised to. Others have recently. There's a breakout candle, perfect back test of the trend line. If again, I wasn't watching it when it broke out. I just picked these up on my radar today, being asked about QS. But from there, it was 26%. That would have been a textbook entry right there. Breakout backtest coming up to the first. I won't call it my first target because we're already there. First resistance level. Let me move it a little higher, right here over that high. It's about 1550. Should probably it'll probably stop there, pull back if it can power on through there. 1810, then 1974 are my next two targets, that big gap right there. And again, if it can get some traction, sure, it might carry even higher than that. We'll see. If these bullish breakouts start to pan out, I'll follow up on them. If they all fizzle out, I'll only update it if you ask. I'm also going to get to a couple here. So here's one that's bearish. Now, if you want my quick thoughts, and again, I haven't read up on any of these companies at all, and I don't pretend to be an expert in the automotive or in the auto parts sector, but what I think is happening if my recession call pans out, you're going to see, during recessions, people tend to hold on to the old clunker a little longer. And when times are booming, people are rolling into a new lease or new car every few years, and it's before the dang thing's even out of warranty. So they're not buying, putting in their own alternator or having some, people that work on their own cars. So I think the auto parts, the makers, Allison, I know, if you're a gearhead or a trucker, I know Allison, they make transmissions. You know that's what they do. And so in a recession, they're probably making, selling a lot of transmissions for new trucks are being built and things like that. And so the stock is at all-time high right now, right? But it's a bearish chart pattern. This one, break of the minor trend line, is going to bring you down here to the secondary uptrend line right there. And a break of that secondary uptrend line is going to bring you to the primary uptrend line that comes off the October 2022 lows or September 2022 lows. So this one, I believe, will, before all said and done, I have price support as well, about 71.63. That's a 26% drop. And it would probably come something like this. It's going to take a little while to get there. Breakdown, first reaction, second reaction, third. And this is where I think this stock is going to ultimately. There's a massive gap or thin zone right here. And so this one, although there are 0 sell signals, let me repeat that. This is a trade setup, not an actionable trade. If it breaks that trend line, especially on a daily closing basis, it'll be an actionable trade. That's about a 36% drop right there. BWA, Borg Warner, not an actionable trade for me. It had positive divergence right here, just like it had positive divergence there. And then it broke out of the wedge. It was a 30% rally. We had 3 equal lows with higher lows on the indicator. That's also positive divergence, but it's already run. I just want to show you that it's a movement in this sector. A lot of these guys have recently broken out, just like they did back here. You can see nice positive divergence. This is a fairly simple yet effective strategy. If you can just be patient, wait for the right time. You need buy signals with the divergences. Sometimes it comes in the form of a candlestick reversal pattern right at the lows. Other times it's a break of a downtrend line or price resistance level. Either way, I want to show you that there's movement in this sector, and I see more bullish charts than I do bearish charts. And those that are bearish may be because, again, they have a different niche, or they're working, they have a contract with one big manufacturer, let's say Ford, and now the charts are priced in. Ford Ford just got clocked the other day. But I'm just using an example. So they're making different parts is what I'm trying to get at. So Allison was transmissions, Autoliv, I think they're switches and lights. I'm not sure. I've seen the name before, but there's positive divergence right there. It needs to break out. There's an intraday break that failed so far. So it really wasn't a breakout, or at least not confirmed on a daily close. Maybe wants to zigzag down a little more. Got a little bit of price support right about here, right about where it stopped. So yeah, this one could pop anytime now. And there's your first target. If it popped today, let's say, and closes above the trend line, 102.62, that's about 7%. Next target, a gap backfill up to about 13% to about 108. And then if it can carry on a little more, about 16% up to that 111.45 level. GNTX, almost, that's what I call an ADL, almost divergent low. Because you had almost equal low with higher lows. Big W basing pattern like natural gas just broke out of right there. There's your resistance, big old gap. If it pops that, it's going to shoot up into the gap real quick. Quick backfill, gap backfill. And then target after that would be right here about 33.38. So those are your levels for GNTX right there. And again, if we get some traction going, that would be my maximum current target. Probably maybe have a downtrend line that might come into play. So there's that one. MOD, Modine Manufacturing Company. Big old divergent high. No sell signals. No reason to short it now. Minor trend line. Actually, minor trend line break. Usually when I see something like that, I drill down to the 60. See what it looks like. Get the divergence. Almost divergence, but not quite there on the RSI. I'm not crazy about it. I just sharing it as a potential. If it does reverse, probably going to come at minimum back to the trend line, and the 200-day moving average is just below it. And got a little price resistance there, price support, I mean, right there. It's a big one right there. LEA, Lear, boom, rallied right into the downtrend line after that divergent low, only on the PPO, overbought there. This one's probably going to come back down again before, but it could break out. And here's the thing, guys. I just went over these. The more that break out, the more likely it is the others are going to run as well in the sector, at least those with the constructive charts. Dorman, DORM, bearish rising wedge, negative divergence, sell signal coming to break of that trend line. And then your first target's right there, second target's right there, and third and final target 98 for a total drop of about 14%. QS I already covered. VC, Vistion, big divergent low. I don't have any clean downtrend lines. I can just have price levels above if it continues to rally. So again, the majority of these have positive, aka bullish divergence, and quite a few of them have pretty well-defined levels to break out, to provide an objective long entry. So this one, if it can break over $9, it's Goodyear, by the way, GT, Goodyear Tire and Rubber. You all know that one. Big divergent low right there. Looks like I was tracking it right up to the point where I might have covered it after the breakout back test rally. That rally ended. No surprise there. Negative divergence. Those are the things I like to see for trend changes. And this again, I was trying to talk to the trolls that I realized weren't paying. This is what we do. This is swing trading. You want to invest in Goodyear, you lost a lot of money recently. You want to swing trade, you can make a fortune if you can just patiently wait for these things to set up, swing the trends. They're all double digits, on the long side. You make 70% there. Short that divergent high, write it down here. You made 56%. Come off that divergent low, and you can make, it's going to rally probably up to this downtrend line unless the market rolls over hard. So you got to be careful there. I could also, looking at the divergence, wouldn't surprise me to see that divergence come in a little bit bigger. Make it one more divergent low, maybe a test of that low or a slight undercut. But if it pops there, it already had divergence in place, so it could run. PHIN, Finia. Almost sounds like my last name. Divergent high right there. Dual trend lines. The primary uptrend line off the November 2023 lows comes in with this. You had one little couple spikes below it, so I set up an alternative, aka BOD, benefit for the doubt trend line, plus a BOD support level about $46. Triple support. Broken's going to be quite bearish. Give you one sold target. Let's just keep it very simple on PHIN. So you short under 46. Cover just above 38.74 would be about a 15% profit if hit. And your stops, and talking about stops, a lot of them, if you have, for example, breakdown on some, let's just talk about this one. So let's say we break down, right? Well, when you break down, sometimes you never look back. You won't hit the target, but quite often you'll come, sometimes you do, sometimes you don't, you back test the wedge. But what you don't want to see is a recovery if it breaks down and then snaps right back here. So on some of the trades, I have stops set above the recent highs. This one, I wouldn't want to see a move, definitely a solid daily close back inside the wedge, especially a second day green candle above it. And if you back test, it all depends if and when. So somewhere in there would be your stop. And that would be, just say you shorted it after the breakdown here. That's going to give you a loss of about 8% versus a profit of about 14. So it's almost a 2-to-1 RR. But it's a strategically placed stop that should keep you in the trade. And of course, you can use a tighter stop, but then you risk getting stopped out. All right. That's, no, let me see. Is that it? Oh, no, here's another one. ADNT, divergent low, nice positive divergent breakout yesterday, moving up today. First target 28.480, 26.10, and then 28.46. If that final current target's hit, it's going to be about almost a 20% run from where we're at now. All right, I'm going to stop here because this looks like where I stopped marking them up. You can see that one, positive divergence right there, divergent low. Not one of my favorites, but again, video's at the 44-minute mark, so we're going to cut it here. I'm sure there's some other things to update for you, but I'm not going to be repag. Get silver, GDX out too. I told you gold finally broke down both the futures and the ETF, which had broken down the other day. So we got a green light on the gold and silver shorts. Threw in GDX for you if you want to, with some price targets today. And I'll continue to hunt for new trade ideas, as well as do my best to update the existing ones. This has been Randy Finney with Right Side of the Chart. Have a great day.